Based on the provided data for Bitcoin, a long-term investment strategy appears to be the most suitable approach. The historical price data demonstrates a consistent upward trend, with notable surges in price. The forecast price further reinforces this bullish outlook, projecting continued growth over the coming weeks. Therefore, a long position in Bitcoin is recommended. The entry price should be around $87,200, aiming to capitalize on the current price level. The stop loss should be set at $76,542.88, the identified support price, to limit potential downside risk. The target price can be set at $96,800, which aligns with the highest projected price in the forecast, allowing for substantial profit potential. This long-term strategy allows for capital appreciation as the price of Bitcoin potentially continues its upward trajectory. Given the Ethereum price history and forecast, a medium-term investment strategy appears most suitable. The historical data reveals a general upward trend, with recent fluctuations around the $3,000 mark. While the forecast predicts a slight dip in the short term, it also indicates a gradual climb towards the end of the period. This suggests a buying opportunity at a potentially lower price point, followed by a potential price increase in the medium term. Therefore, a long position in Ethereum is recommended. A suitable entry price would be around $3,050, slightly below the current price, allowing for some room for a short-term dip before the anticipated upward movement. A stop-loss order should be placed at $2,961.23, aligning with the support price, to minimize potential losses. The target price for this medium-term investment could be set at $3,370.85, coinciding with the resistance price, aiming to capitalize on the projected price increase. The historical price data for Ripple reveals a clear upward trend, with the price consistently rising over the past 2 weeks. The forecast predicts further gains, reaching a peak of $0.874 in the coming week. This positive momentum, coupled with the support price of $0.7331 and the resistance price of $0.8199, suggests a favorable environment for a long-term investment strategy. Therefore, a long position in Ripple is recommended for a medium-term investment horizon. An ideal entry price would be around $0.740, slightly above the current price and below the resistance level. The stop loss should be set at $0.730 to minimize potential losses. The target price should be set at $0.800, aiming to capitalize on the projected price increase while leaving room for potential price fluctuations. This strategy allows for participation in the anticipated upward movement of Ripple while managing risk effectively. The provided data for Solana suggests a potential for continued upward movement in the short to medium term. The historical price data shows a generally upward trend, and the forecast indicates further price increases. The current price is positioned near the support level of $199.76, suggesting a strong base for potential growth. The resistance level of $222.1 provides a target for potential price appreciation. Considering this information, a long position in Solana appears to be a favorable strategy. To implement this strategy, we can set an entry price at $210, aligning with the current price and allowing for potential upside. A stop-loss order can be placed at $200 to protect against significant price declines. The target price can be set at $220, aiming to capture a portion of the potential price appreciation towards the resistance level. This strategy combines a bullish outlook with risk management measures, allowing for potential profits while mitigating potential losses. Given the historical price data and the forecast for Cardano, a medium-term investment strategy appears to be the most suitable. The historical prices show a consistent upward trend, with recent price action suggesting a consolidation phase near the support level of $0.4911. The forecast indicates a potential upward movement towards the resistance level of $0.6125. This suggests that Cardano may experience a gradual price increase in the coming weeks. Therefore, a long position is recommended for this strategy. A suitable entry price would be around $0.520, allowing you to buy in after a potential pullback from the recent highs. The stop loss should be set at $0.495, slightly below the support level, to protect against any unexpected price decline. The target price could be set at $0.600, aiming to capture a significant portion of the potential upward movement towards the resistance level. This strategy allows you to participate in the anticipated price appreciation of Cardano while managing risk effectively. Based on the provided price history and forecast for Filecoin, a bullish investment strategy appears promising. The historical data reveals a consistent upward trend, with the price steadily increasing over the past 2 weeks. The forecast further reinforces this positive outlook, predicting continued growth in the coming week. This suggests that Filecoin has strong momentum and is likely to continue its upward trajectory. Therefore, a long position is recommended for a medium-term investment strategy. An ideal entry price would be around $3.20, aligning with the forecast and offering a potential entry point before the price potentially surges towards its projected highs. A stop-loss order should be placed at $3.10 to mitigate risk and protect against unexpected price reversals. The target price could be set at $3.50, aiming to capitalize on the anticipated price appreciation while leaving room for potential adjustments based on market conditions. Filecoin shows a fluctuating price pattern over the past 2 weeks, with a slight upward trend. The forecast suggests a slight dip in the coming week, but it remains within the range of recent highs. The support price sits at $3.432, while the resistance is at $3.913. Given this information, a medium-term investment strategy appears to be the most suitable approach for Filecoin. A long position is recommended, aiming to capitalize on the potential for a price rebound towards the resistance level. An entry price of $3.70, slightly below the current price, allows for some room for price correction before entering the trade. The stop loss should be set at $3.45 to protect against a significant drop below the support level. The target price can be set at $3.90, aiming to capture a portion of the potential upside movement towards the resistance. This strategy balances risk and reward, allowing for potential profit while mitigating potential losses. Based on the provided Theta network price history and forecast, a medium-term investment strategy appears most suitable. The historical data reveals a fluctuating trend with periods of both growth and decline. However, the forecast suggests a slight upward movement over the next week. This indicates a potential for profit within a medium-term timeframe, allowing for some price volatility to be absorbed. A long position is recommended for this strategy. An ideal entry price would be around $1.30, aligning with the forecast's upward trajectory. The stop loss should be set at $1.247, just below the support price, to minimize potential losses. The target price could be set at $1.554, the resistance price, aiming to capture the potential full upside movement. This strategy allows for capital appreciation while managing risk through a defined stop loss and a realistic target price based on the current market conditions and forecast. Based on the provided information for Dogwifhat, a medium-term investment strategy appears most suitable. The historical price data demonstrates an overall upward trend, with recent peaks exceeding $4. The forecast predicts continued growth, reaching values above $4 in the coming weeks. This suggests a bullish outlook for Dogwifhat in the medium term. Therefore, I recommend a long position on Dogwifhat. A suitable entry price would be around $3.80, aligning with the current price and the projected upward movement. The stop loss should be set at $3.50 to manage risk and protect against potential price corrections. The target price could be set at $4.50, capitalizing on the anticipated price increase and reaching a significant resistance level. This strategy aims to capitalize on the bullish momentum of Dogwifhat over the next few weeks, while incorporating risk management measures. Based on the provided information for Stellar, a medium-term investment strategy appears most suitable. The historical price data demonstrates a clear upward trend, with recent price fluctuations suggesting consolidation before a potential breakout. The forecast prices project continued growth, reaching as high as $0.149 within the next week. This positive outlook, coupled with the support price at $0.1023, indicates a favorable risk-reward profile for a medium-term investment. Therefore, I recommend a long position on Stellar. An optimal entry price would be around $0.126, aligning with the first forecast price and offering a potential entry point before a potential surge. The stop loss should be set at $0.1023, the identified support price, to minimize potential losses. The target price should be set at $0.149, the highest projected price, allowing for significant profit potential. This strategy capitalizes on the bullish sentiment surrounding Stellar while managing risk through a well-defined stop loss and a realistic target price. Based on the provided price data for Starknet, a medium-term investment strategy appears most suitable. The historical prices demonstrate a consistent upward trend, with recent fluctuations suggesting a potential consolidation phase. The forecast prices, while slightly lower than the current price, still indicate a positive outlook for the coming weeks. The support price of $0.4132 offers a good entry point for a long position, as it represents a level where the price has found previous support. Given the current price and the forecast, a medium-term investment strategy suggests an entry price near the support level of $0.4132. A stop-loss order could be placed slightly below this level, around $0.405, to limit potential losses. The target price could be set at 50 cents, a level that represents a reasonable upside potential based on the recent price action and the forecast. This strategy allows for capturing potential gains from the anticipated upward movement while mitigating risk through a well-defined stop-loss order. Based on the provided information for PENDLE, a medium-term investment strategy appears most suitable. The price history demonstrates volatility, with a recent upward trend. Although the forecast suggests a slight decline in the coming week, the support price of $4.928 provides a strong foundation for potential price recovery. The resistance level of $5.924 indicates the potential for further upside movement in the medium term. Therefore, an investment strategy involving a long position in PENDLE is recommended. A suitable entry price would be around $5.25, aligning with the current price and offering a margin of safety below the recent highs. The stop loss should be set at $4.95, protecting against a significant price drop below the support level. The target price could be set at $5.80, aiming to capitalize on the potential for price appreciation towards the resistance level. This strategy allows for a balanced approach, taking advantage of the current upward momentum while managing risk through a well-defined stop loss. Given the price trends and forecast for Render, an investment strategy focused on a short-term approach appears suitable. The historical prices show an upward trajectory, with the current price nearing the forecast and its support level. The resistance level suggests potential for further upward movement. Based on this, a long position is recommended to capitalize on the potential price increase towards the resistance level. An entry price of $6.53, aligned with the current price, would be ideal for this strategy. The stop loss should be set at $6.16, slightly below the lowest forecast price, to protect against potential price reversals. The target price should be set at $7.18, the resistance level, allowing you to take profits before a potential pullback. This strategy aims to capitalize on the short-term bullish momentum of Render while managing risk through a well-defined stop loss. Given the price trends and forecast for VeChain, a medium-term investment strategy appears to be the most suitable approach. The historical prices demonstrate a general upward trend, albeit with some recent fluctuations. The forecast suggests a slight upward movement in the coming weeks, but the price is currently hovering near the resistance level. This indicates that a period of consolidation or sideways movement might occur before a potential breakout. Therefore, an investment strategy would involve entering a long position at a price slightly below the current resistance level of $0.02448. The stop loss would be placed below the recent support level of $0.02339 to mitigate risk. The target price would be set at $0.0284, which is the recent high point and represents a reasonable upside potential. This strategy allows for participation in the potential upward movement while managing risk effectively. The medium-term investment horizon allows for the price to consolidate and potentially break out before taking profits. Based on the provided price history and forecast for Binance Coin, a medium-term investment strategy appears most suitable. The historical data reveals a generally upward trend, with recent price fluctuations around the $620 level. The forecast suggests a continued upward trajectory, albeit with some potential short-term volatility. Therefore, a long position is recommended for a medium-term investment. An optimal entry price would be around $620, aligning with the support price and recent price action. A stop loss should be placed slightly below the support price at $615 to minimize potential losses. The target price could be set at $660, the resistance level, aiming to capitalize on the anticipated upward momentum. This strategy allows for potential profit from the expected price increase while managing risk through a defined stop loss level. Based on the provided Conflux data, a short-term bearish investment strategy seems most appropriate. The price history shows a recent peak around $0.173 and a subsequent decline, aligning with the downward trend projected in the forecast. The forecast suggests prices could drop to around 14 cents, while the support price sits at $0.1333. This indicates a high probability of further price depreciation in the short term. Therefore, an aggressive short-term strategy would involve taking a short position on Conflux. A suitable entry price would be around $0.154, close to the current price and above the support level. The stop loss should be set at $0.158 to limit potential losses if the price unexpectedly rises. The target price could be set at $0.138, aiming to capture a significant portion of the predicted price decline. This strategy capitalizes on the anticipated bearish momentum while managing risk through a well-defined stop loss. Based on the provided price data for Worldcoin, a medium-term investment strategy appears to be the most suitable approach. The historical price shows a general upward trend, with recent fluctuations indicating a period of consolidation. The forecast price suggests continued growth, albeit at a slightly slower pace than the previous 2 weeks. This suggests a potential for capital appreciation over the medium term. Given this outlook, a long position in Worldcoin is recommended. An ideal entry price would be around $2.15, slightly below the current price and near the support level of $2.042, allowing for a margin of safety. A stop-loss order should be placed at $2.04 to protect against unexpected price drops. The target price can be set at $2.45, aiming for a potential upside of approximately $14%, aligning with the resistance level and the forecast price trajectory. This strategy balances risk and reward, aiming to capitalize on the medium-term growth potential of Worldcoin while mitigating potential downside risks. Given the historical price data and the forecast for Avalanche, a medium-term investment strategy appears to be the most suitable approach. The historical prices show a general upward trend, suggesting a bullish sentiment. However, the recent price action has been somewhat volatile, with some minor dips. The forecast indicates a period of consolidation around the $31 price level, which aligns with the support price of $30.52. Therefore, a long position is recommended for a medium-term investment strategy. The entry price should be around $31, aligning with the forecast and allowing for some room for the price to consolidate. The stop loss should be set at $30.52, the support price, to minimize potential losses. The target price could be set at $35.81, the resistance price, aiming to capture a significant portion of the potential upside. This strategy allows for capital appreciation while managing risk effectively. Based on the provided data for Jupiter, a medium-term investment strategy appears most suitable. The historical price data shows a general upward trend, but the recent price action has been consolidating around the $1.10 level. The forecast suggests a slight dip in the coming week before potentially stabilizing around $1.10 to $1.11. This consolidation period presents an opportunity to enter a long position with a medium-term outlook. A suitable entry price would be around $1.09, below the current market price, allowing for a margin of safety. The stop loss should be set at $1.06, below the recent support level, to protect against any unforeseen price drops. The target price could be set at $1.22, aligning with the historical highs and the potential for further upward movement. This strategy capitalizes on the expected stabilization and potential continuation of the upward trend, while managing risk through a well-defined stop loss. EOS shows a recent upward trend with the current price hovering near its resistance level. The forecast predicts a slight increase in price over the next week, suggesting continued bullish momentum. However, the support price is relatively close, indicating potential for a pullback. Considering these factors, a short-term investment strategy with a long position is recommended. An entry price of $0.550 could be considered, aiming to capitalize on the predicted price increase. The stop loss should be set at $0.5401, the support price, to limit potential losses in case of a sudden price reversal. The target price could be set at $0.5825, the resistance level, allowing for a significant profit if the price reaches its predicted high. This strategy aims to capture the short-term upward momentum of EOS while managing risk through a well-defined stop loss. Given the price trends and forecast for TRON, a medium-term investment strategy appears promising. The historical prices show a recent dip but are now recovering, supported by the rising forecast. The current price is hovering near the support price of $0.1695, suggesting potential for further upward movement. Therefore, a long position is advisable to capitalize on this potential. An entry price of $0.170 would allow you to buy in at a relatively low point while the price is still recovering. A stop loss of $0.169 would protect your investment from significant losses if the price drops unexpectedly. A target price of $0.187, slightly below the resistance level, offers a good opportunity to secure profits as the price moves towards its predicted upward trajectory. Based on the provided price history and forecast for SE, a short-term investment strategy appears most suitable. The recent price history demonstrates an upward trend, but the forecast suggests a slight pullback in the coming week. The current price is close to the resistance level of $0.4386, indicating a potential for a short-term correction. Therefore, a short position is recommended. An aggressive entry price would be around $0.435, allowing for a small margin above the current price. The stop loss should be placed at $0.448 to protect against an unexpected price surge. The target price could be set at 41 cents, aiming to capitalize on the potential pullback indicated by the forecast. This strategy leverages the recent price momentum while acknowledging the possibility of a short-term correction. Given the price trends and forecast for Shiba Inu, a medium-term investment strategy appears to be the most suitable approach. The historical prices show a general upward trend, with recent fluctuations suggesting volatility. The forecast indicates continued upward movement, with prices potentially reaching $0.0000246. However, the resistance price of $0.0000280 suggests that further significant gains might be limited in the short term. Therefore, a long position is recommended to capitalize on the anticipated price increase. A strategic entry price would be around $0.0000235, aligning with the current price and recent dip. A stop loss order should be placed at $0.0000202, the support price, to minimize potential losses. The target price could be set at $0.0000246, aiming to capture a portion of the predicted price increase. This strategy allows for a balanced approach, leveraging the potential for growth while mitigating risk through a well-defined stop loss. Based on the provided data for Dogecoin, a medium-term investment strategy appears most suitable. The historical price data reveals a consistent upward trend, with recent fluctuations suggesting a period of consolidation. The forecast price indicates further upward movement, reaching a high of $0.433 in the coming weeks. Therefore, an investment strategy focusing on a long position is recommended. A suitable entry price would be around $0.364, the recent low point. The stop loss should be set at $0.336, slightly below the lowest predicted price in the forecast. This provides a buffer against unexpected market dips. The target price could be set at $0.400, aiming to capture a significant portion of the predicted upward movement. This medium-term approach allows for potential gains while mitigating risk through a well-defined stop loss. Given the price trends and forecast for Hooked Protocol, a cautious investment strategy would focus on a medium-term approach. The historical prices show a slight downward trend over the past 2 weeks, with the current price hovering near the support level of $0.3632. The forecast suggests a further slight decline in the coming week, indicating a potential for sideways movement or a slight retracement. In this scenario, a medium-term short position is advisable. An entry price of $0.385, slightly above the current price, would allow you to capitalize on any further downward movement. The stop loss should be set at $0.396 to protect against unexpected price surges. The target price should be set at $0.355, aligning with the forecasted lower price range, allowing you to secure profits before the price potentially rebounds. This strategy allows for a balanced approach, mitigating risk while aiming to capitalize on the anticipated price movement. Given the price trends and forecast for Evo, a medium-term investment strategy appears most suitable. The historical prices demonstrate a general upward trend, with recent fluctuations indicating potential consolidation before further growth. The forecast suggests a slight dip followed by a gradual climb, aligning with the idea of a short-term consolidation before a medium-term upward movement. Therefore, a long position is recommended for Evo. An ideal entry price would be around $0.325, slightly below the current price and above the support level of $0.319. The stop loss should be set at $0.319 to minimize potential losses if the price drops below the support. The target price could be set at $0.3767, the resistance level, aiming to capture the potential upside momentum. This strategy allows for a balanced approach, taking advantage of the positive price trends while managing risk effectively. Given the price trends and forecast for Litecoin, a short-term investment strategy focusing on a long position appears promising. The historical prices demonstrate a consistent upward movement, with the current price hovering near the support level of $0.00733. The forecast suggests a continued upward trajectory, with prices potentially reaching $0.007872, the resistance level. Therefore, an aggressive investment strategy would involve entering a long position at the current price of around $0.00733. A stop-loss order should be placed at $0.00715 to mitigate potential losses if the price unexpectedly drops. The target price could be set at $0.007872, aiming to capture the full potential upside before the price encounters resistance. This strategy capitalizes on the anticipated price increase and aligns with the short-term bullish outlook for Litecoin. Suncoin's recent price history shows fluctuations, but generally trends upwards. The forecast predicts continued growth, reaching around $0.0215 in the coming week. The support price of $0.02005 indicates a potential floor for the price, while the resistance at $0.022146 suggests an upper limit for this short-term growth. Given this information, a long-term investment strategy is advisable. I recommend entering a long position at the current price, around $0.0193, as it is below the forecast price and near the support level. This strategy allows for potential growth as the price moves towards the resistance. Set a stop-loss order at $0.0185, slightly below the recent low, to limit potential losses. The target price should be set at $0.0214, slightly below the resistance level, allowing for a reasonable profit margin while leaving room for further upside potential. Based on the provided price data for Pepe, a short-term investment strategy appears to be the most suitable. The 2-week price change shows an upward trend, with the forecast indicating continued growth. This suggests that Pepe could experience further price appreciation in the near future. However, given the relatively volatile nature of the cryptocurrency market, a short-term approach allows for capitalizing on potential price swings while mitigating the risk of prolonged market downturns. Therefore, an aggressive short-term investment strategy for Pepe would involve entering a long position at the current price, which is around $0.0000141. The stop loss should be set slightly below the recent low of $0.0000130 to protect against unexpected price drops. The target price could be set at $0.0000165, aligning with the first forecast price, aiming to capture a quick profit from the anticipated upward movement. This strategy capitalizes on the bullish sentiment indicated by the price trends and forecast while maintaining a disciplined approach with clear entry, stop loss, and target prices. Given the price trends and forecast for Coin, a medium-term investment strategy would be suitable. The historical prices demonstrate a consistent upward trajectory, with the current price hovering near its support level of $5.229. The forecast suggests a gradual increase towards $5.30, indicating potential for further growth. Therefore, a long position is recommended to capitalize on this anticipated upward momentum. A suitable entry price would be $5.25, slightly above the support level, to allow for some price fluctuation. The stop loss should be set at $5.20, providing a buffer against potential short-term price dips. The target price can be set at $5.35, aligning with the resistance level and allowing for a reasonable profit margin. This strategy balances risk and reward, aiming to capitalize on the medium-term bullish outlook for Coin while mitigating potential losses. Based on the provided Bitcoin Cash price data and forecast, a short-term investment strategy with a long position appears most suitable. The historical price demonstrates a generally upward trend, with recent fluctuations suggesting consolidation. The forecast indicates continued upward momentum, reaching a peak around $425. This suggests a potential for further price appreciation in the short term. Therefore, I recommend entering a long position at the current price of $415. The stop loss should be set at $405, safeguarding against unexpected price drops. The target price can be set at $440, aligning with the resistance level and allowing for a potentially profitable outcome. This strategy capitalizes on the anticipated upward movement while managing risk through a well-defined stop loss. First, we need to analyze the current trend of Chainlink. The historical price data shows a fluctuating pattern with a slight upward trend. The forecast price suggests a consolidation phase around $13. Considering the support price of $12 and the resistance price of $13.67, a short-term investment strategy appears promising. Therefore, I recommend a long position on Chainlink. A suitable entry price would be $12.50, slightly above the support level. The stop loss should be set at $12 to protect against unexpected price drops. The target price can be set at $13.50, aiming to capture the potential upside towards the resistance level. This strategy capitalizes on the anticipated consolidation and potential upward movement within the short term. Given the price trends and forecast for Polkadot, a medium-term investment strategy appears most suitable. The historical prices show a generally upward trend, but the recent price action suggests some consolidation. The forecast indicates a slight upward movement in the coming week, with prices potentially reaching around $4.85. This suggests a bullish outlook for Polkadot in the medium term. Therefore, a long position is recommended. A suitable entry price would be around $4.70, allowing you to buy in at a relatively attractive price point. The stop loss should be placed at $4.60 to protect against a sudden price drop below the support level. The target price could be set at $5, aiming to capture a potential upside move towards the resistance level. This strategy balances risk and reward, allowing you to potentially benefit from the anticipated upward movement in Polkadot's price over the medium term. Near Protocol's recent price history reveals a consistent upward trend, with a notable surge in the last few weeks. The forecast suggests continued growth, predicting prices to rise above the current levels over the next week. The support price sits at $4.99, providing a solid foundation for potential buying opportunities. The resistance level at $5.575 indicates a ceiling for the immediate price movement. Considering these factors, an investment strategy focusing on the long side appears promising. A strategic entry point could be around $5.15, capitalizing on the potential for a pullback before the next upward push. Setting a stop loss at $4.99, slightly below the support price, would help mitigate risk. The target price could be set at $5.55, aiming to capture a substantial portion of the anticipated price increase before reaching the resistance level. This strategy allows for participation in the bullish momentum while managing risk effectively. Based on the provided data for stacks, a medium-term investment strategy appears to be the most suitable. The historical price data shows a generally upward trend, with recent fluctuations around the $1.80 price level. The forecast suggests continued upward momentum, with prices projected to reach around $1.80 in the coming week. This indicates a potential for capital appreciation in the short to medium term. Given this outlook, a long position in stacks is recommended. A suitable entry price would be around $1.75, slightly below the current market price, allowing for some room for price adjustment. A stop-loss order should be placed at $1.70 to minimize potential losses if the price drops unexpectedly. The target price could be set at $1.90, aiming to capture a significant portion of the projected price increase. This strategy balances risk and reward, allowing for potential gains while mitigating potential losses. Aptos shows a fluctuating price trend over the past 2 weeks. Although the price has shown some upward movement, the forecast suggests a relatively stable price range in the coming week. Considering the forecast and the support and resistance levels, a medium-term investment strategy appears to be the most suitable approach for Aptos. A long position could be considered, aiming to capitalize on potential upward movement towards the resistance level of $13.70. The entry price could be set at $11.20, slightly above the current price and below the resistance level. The stop loss should be placed at $10.39, the support price, to minimize potential losses. The target price could be set at $13, allowing for a reasonable profit margin while avoiding the risk of overshooting the resistance level. This strategy balances risk and reward, aiming for steady gains within a defined timeframe. Given the price trends and forecast for Litecoin, a bullish investment strategy would focus on a medium-term approach to capitalize on the anticipated price increase. The historical prices show a consistent upward trajectory, with the current price near its forecast and near the support level of $73.98. The resistance is at $82.82, indicating that there is still room for upward movement. The forecast suggests Litecoin could rise from the current price to around $82. Therefore, a long position is advisable to capitalize on the potential for a price increase towards the resistance level. An ideal entry price would be around $77, aligning with the forecast and providing a margin of safety above the support level. The stop loss should be set at $73.98, the support level, to protect against any unexpected price decline. The target price should be set at $81, allowing you to take profits before reaching the resistance level and potentially mitigating the risk of a pullback. This strategy balances risk and reward, aiming to capture a significant portion of the anticipated price increase while protecting against potential losses. Given the price trends and forecast for Uniswap, a medium-term investment strategy appears to be the most suitable approach. The historical price data reveals a fluctuating pattern with an overall upward trend. While the forecast suggests a slight decline in the short term, the long-term outlook remains positive. The support price at $8.146 provides a strong base for potential rebounds, while the resistance level at $9.297 indicates a ceiling for immediate upward movement. Therefore, a long position is recommended for Uniswap. The entry price should be set at $8.50, slightly above the current price and below the resistance level, allowing for potential upside movement. The stop loss should be placed at $8.20 to mitigate risk if the price drops below the support level. The target price can be set at $9, aiming for a moderate gain within the medium-term timeframe. This strategy capitalizes on the underlying bullish sentiment while managing risk effectively. Based on the provided Bittensor price information, a medium-term investment strategy appears most suitable. The historical price data demonstrates a clear upward trend, with Bittensor consistently reaching new highs. However, the recent forecast suggests a slight pullback in the short term. This indicates a potential opportunity to enter a long position at a slightly discounted price before the upward trend resumes. Therefore, I recommend a long position in Bittensor with an entry price of $490. The stop loss should be set at $460 to mitigate potential downside risk. The target price could be set at $550, allowing for a healthy profit margin while still aligning with the long-term bullish outlook. This strategy capitalizes on the historical upward momentum and anticipates a continuation of the trend in the medium term. Given the price trends and forecast for Internet Computer, a medium-term investment strategy appears suitable. The historical prices show a fluctuating trend with recent upward momentum. While the forecast suggests a slight decline in the coming week, it still projects prices above the support level. This indicates a potential for consolidation and a subsequent rebound in the medium term. Therefore, a long position is advisable to capitalize on this potential. An ideal entry price would be around $8.20, aligning with the forecast and offering a potential upside. The stop loss should be set at $7.80, slightly below the recent support level, to protect against significant price drops. The target price could be set at $9, aiming for a moderate gain based on the historical price movements and the forecast suggesting a potential upward trend in the medium term. This strategy allows for a balanced approach, mitigating risk while aiming for reasonable returns in the medium term. Given the provided price information for Artificial Superintelligence Alliance, a cautious investment strategy focusing on the short term seems most appropriate. The 2-week price history demonstrates a volatile pattern with a recent downward trend, while the forecast predicts further declines. The support price at $1.205 suggests a potential floor for the price, but the resistance at $1.358 indicates a strong barrier to upward movement. Considering this, a short position could be advantageous to capitalize on the anticipated price drop. A potential entry point could be around $1.26, slightly above the current price, allowing for a buffer against any unexpected price fluctuations. The stop loss should be set at $1.30 to limit potential losses if the price unexpectedly rallies. The target price could be set at $1.18, aiming to capture a portion of the predicted decline. This strategy prioritizes risk management by employing a tight stop loss and focusing on a short-term timeframe to minimize exposure to potential market reversals. The historical price data for Optimism reveals a fluctuating trend with periods of both growth and decline. While the forecast suggests a slight downward movement in the coming weeks, the price remains relatively close to its support level. Considering these factors, a short-term investment strategy focusing on a long position appears to be suitable. The entry price could be set at $1.55, aligning with the forecast and providing a potential margin for profit. To manage risk, a stop-loss order should be placed at $1.46, slightly below the recent lows, to limit potential losses. The target price could be set at $1.66, aiming to capture a significant portion of the potential upside before the price potentially reverses. This strategy leverages the current price proximity to support and the forecast slight downward trajectory, aiming to capitalize on a potential short-term price increase before a potential correction. Given the Ethereum Classic price data, the 2-week price change shows a slight upward trend, with the forecast suggesting a continued, though tempered, increase. The current price is near the support level of $21.57, indicating potential for further upward movement. However, the resistance at $24.33 suggests that significant gains might be limited in the near term. Considering this information, a medium-term investment strategy appears suitable. We propose entering a long position at $22, allowing for a buffer above the current price and the support level. The stop loss should be set at $21.50, just below the support price, to protect against a sudden downward reversal. The target price should be set at $24, aiming for a reasonable profit before encountering the resistance level. This strategy balances risk and reward, capitalizing on the potential for Ethereum Classic to continue its upward trend while mitigating potential losses. Given the price trends and forecast for Ethereum name service, a cautious investment strategy would focus on a short-term approach to capitalize on potential price fluctuations. The historical prices show a slight upward trend, but the forecast suggests a potential pullback in the coming week. The current price is near the resistance level of $17.18, indicating that there might be a short-term correction before any further upward movement. Therefore, a short-term short position is advisable to capitalize on this potential pullback. An entry price of $17 could be considered, allowing you to enter the short position before any potential price surge towards resistance. The stop loss should be set at $17.20 to protect against unexpected upward movement, and the target price could be set at $16, aiming to capture potential profits from the anticipated price decline. This strategy allows you to take advantage of short-term volatility while mitigating risk with a well-defined stop-loss order. Remember, this is just a suggestion, and it's crucial to conduct thorough research and consider your own risk tolerance before making any investment decisions. Based on the provided price history and forecast for Solana name service, a short-term bearish strategy appears most suitable. The historical price data reveals a downward trend, with recent price fluctuations around the 20 cents mark. The forecast further reinforces this bearish outlook, predicting a continued decline over the next week. This suggests that the price of Solana name service is likely to move towards its support level of $0.1917. Therefore, an aggressive short-term investment strategy would involve taking a short position on Solana name service. A suitable entry price would be around $0.216, aligning with the current price and recent highs. The stop loss should be set at $0.224, slightly above the entry price, to limit potential losses if the price unexpectedly rebounds. The target price would be $0.195, aiming to capture a portion of the predicted decline while staying clear of the immediate support level. This strategy capitalizes on the bearish momentum and potential price drop indicated by the historical data and forecast, aiming for a relatively quick profit within a short time frame. Given the price trends and forecast for Aave, a cautious investment strategy would focus on a short-term approach, capitalizing on potential price fluctuations. The historical prices demonstrate volatility, with a recent upward trend followed by a slight dip. The forecast suggests a continued downward movement, potentially reaching $158 in the coming week. The support price is at $138.41, indicating a potential floor for the price. However, the resistance level at $159.12 suggests that the upward momentum might be limited. Therefore, a short position on Aave could be considered for a short-term investment horizon. An entry price around $165, near the current price and slightly above the forecast, would allow for potential profit as the price potentially declines towards the support level. A stop loss at $172 would limit potential losses if the price unexpectedly surges. The target price could be set at $158, aligning with the forecasted lowest price, allowing for a calculated profit before reaching the support level. Given the injective price history and forecast, a medium-term investment strategy appears most suitable. The recent price action shows a consistent upward trend, reaching a peak of $26 before consolidating around the $23 to $24 range. The forecast indicates a sideways movement with prices hovering around $23 for the next week. This suggests a period of consolidation before potential further upward movement. Therefore, a long position is recommended with an entry price at $23.50, a stop loss at $22.40, and a target price at $25. This strategy capitalizes on the historical upward trend and the potential for further growth while mitigating risk by setting a stop loss below the recent support level. The target price is set above the recent resistance level, aiming to capture a significant portion of the potential upside. This approach allows for a balanced risk-reward profile in the medium term. Given the price trends and forecast for Polygon, a short-term investment strategy focusing on a long position appears most suitable. The historical prices demonstrate a consistent upward trend, with the current price nearing its forecast and close to the support level of $0.3132. The resistance level of $0.3663 suggests potential for further upward movement. Therefore, a long position is advisable to capitalize on this potential price increase. For this strategy, an entry price of $0.330 would be ideal, allowing you to buy in before the price potentially reaches its resistance. The stop loss should be set at $0.315 to protect against any unexpected price decline. The target price should be set at $0.370, aiming to capitalize on the potential price increase towards the resistance level. This strategy allows for a short-term investment approach with the potential for significant returns if the forecast holds true.